All right, listen up. This is huge news in the retail world, and it could impact your shopping trips. JC Penney, yes, that JC Penney, just made a massive move that's shaking things up. They've just sold off nearly 120 of their stores in a deal worth nearly $1 billion. That's right. We're talking about $947 million for a huge chunk of their real estate. And here's the kicker you need to know, and I'll drop the full bomb about who really benefits and what it means for your local store at the very end of this video, so stick around. You won't want to miss it. This isn't just some small side deal. This is a big, bold statement about JCPenney's future and the shifting landscape of American retail. So let's break down exactly what happened, why it matters, and what's coming next. Just recently, it was announced that 119 JCPenney stores across the country have been sold. Think about that for a second. Nearly 120 locations changing hands in one fell swoop. The buyer? It's a private equity firm from Boston called Onyx Partners. These guys are in the business of buying and selling companies and their assets for profit, and they just dropped a cool $947 million in an all-cash deal to snatch up these stores. Now, who exactly were they buying from? They bought these properties from a special group called Copper Property CTL Pass-Through Trust. This group was set up after JCPenney had some serious money troubles a few years back. The deal is set to officially close by early September, specifically September 8th. The buyer, Onyx Partners, has already done all their homework and their deposit is locked in, so meaning this deal is definitely happening. Now, you might be thinking, why sell these stores now? Well, it all goes back to a really tough time for JCPenney. About 5 years ago, in 2020, JCPenney filed for bankruptcy. Remember that? Amidst all the chaos, they had to reorganize to survive. As part of that massive reorganization, a special group was created by JCPenney's old lenders. This group, Copper Property Trust, took control of about 160 JCPenney store locations and even some distribution centers. Their whole job was to eventually sell these properties to pay back JCPenney's creditors, basically the people and companies JCPenney owed money to from back in the day. So this sale isn't really about JCPenney suddenly needing cash for new projects. It's about cleaning up old debts. These specific 119 stores are what's called net lease properties. What does that mean in plain English? It means that JCPenney isn't just paying basic rent on these stores. They're also responsible for the operating expenses, things like property taxes, insurance, and maintenance. So in many ways, they act like owners, even though they're technically renting. This kind of arrangement makes these properties attractive to buyers like Onyx Partners. They get a steady stream of income from JCPenney paying all those bills, and they've got a long-term lease in place. It's a pretty sweet deal for an investor. So, what does this mean for your local JCPenney? Are they closing? The answer might surprise you, and it reveals a lot about the future of these locations. The good news is all 119 stores that were sold are currently operating. That means as of right now, you shouldn't see any immediate changes to these locations. Onyx Partners, the new owner of the properties, hasn't said anything publicly about their plans for the stores themselves. They're primarily real estate investors, meaning they bought the buildings, not the JCPenney business operating inside them. JCPenney already closed over 200 U.S. locations when they filed for bankruptcy back in 2020. More recently, they announced 7 store closings that officially happened in May 2025. But this current sale of 119 stores is a different beast. These are the locations that were part of that special trust created to pay off old debts. These stores are spread out across 34 states, totaling nearly 16 million square feet of retail space. That's a ton of floor space. For example, 21 of these stores are in Texas and 19 are in California. That gives you an idea of the sheer scale of this transaction. The typical store size in this portfolio is about 133,000 square feet. That's a big footprint, usually attached to a mall or a large shopping center. So while the properties have changed hands, JC Penney is still operating these stores under a long-term master lease, meaning they've got a deal in place to keep operating these specific locations for the foreseeable future. So for now, your shopping experience at these JC Penney locations should remain the same. All right, so where's all this nearly billion-dollar cash going? This is the crucial piece of the puzzle that tells us the real story behind this massive deal. The money from the sale, that $947 million, is not going back into J.C. Penney's current operations to build new stores or launch new products. Nope. After all the closing costs are paid, somewhere between $928 and $932 million of that cash will be distributed directly to JCPenney's old creditors. Think of it this way. When J.C. Penney went to bankruptcy, they owed a lot of people money. This sale is the big payout to help settle those old debts. It's about clearing the slate from past financial struggles. It's a huge step for J.C. Penney to fully move past its bankruptcy, freeing up the current J.C. Penney business to focus on its future without that massive real estate burden hanging over its head. For Onyx Partners, this isn't just about buying buildings. These properties are expected to generate about $100 million in first-year net revenue from the existing leases. That's a lot of passive income just from JCPenney continuing to operate these stores. They see a good, steady investment in these properties because JCPenney is locked into that long-term lease. It's a win-win. JCPenney sheds old debt, and Onyx Partners gets a massive income-generating portfolio of properties. So while JCPenney itself is still working to reinvent itself and stay relevant, this real estate deal is a major financial milestone for the company's post-bankruptcy journey. It solidifies their current footprint while allowing them to move forward. And that's the full breakdown of this massive JCPenney real estate deal. Hopefully this helps you understand the ins and outs of what's really going on. If you found this breakdown helpful, make sure to smash that like button. It really helps the channel. Also, don't forget to subscribe so you don't miss out on future market updates and financial insights. And hit that bell icon so you get notified every time I drop a new video. Thanks for watching, and I'll see you in the next one.